Alan Kohler, welcome to 7:30.
Thanks.
Just one question. First of all, it's Michele Bullock's first go as governor, her first rates decision. Any difference in style or form compared to the previous governor?
Absolutely none. In fact, the statement today was almost identical to Philip Lowe's last statement. So I'm sure that was deliberate, that she wanted to make the point that she's, an agent of continuation rather than an agent of change. So I'm sure that was what she intended.
And what reasons then did she give today for keeping the cash rate on hold?
Well, the key phrase was that the data are consistent with inflation coming down to the target range of 2 to 3% by late 2025. I mean, it's interesting that that's the date they're talking about. I mean, I think everyone's kind of focused a bit on inflation needs to come down quickly, but they're actually talking about 2 years, right? That's a long time.
Yeah, well, when I heard that today, I thought I'd actually misheard it at first, and I was mishearing 2025 for 24, but actually we are talking about, is it the end of 2025?
They are, and that's what they've always talked about. It's always, that's been their intention all along, and that's because the Reserve Bank, perhaps more than other central banks around the world, is very concerned with keeping employment as high as it can while getting inflation under control. So it doesn't want to do it quickly. It wants to try to preserve as much employment as possible while getting inflation back to the target range of 2 to 3%.
Now, both Philip Lowe and Jim Chalmers for a long time have been talking about what an extraordinary number the unemployment figure is. But what is the Reserve Bank, when they talk about that forecast and what will happen to unemployment, what are they saying?
Their forecast for unemployment is 4.5% next year. And in a sense, that's a precondition for getting inflation down to within 2 to 3% the year after. So their whole kind of modus operandi is about unemployment, really. They target an employment rate that doesn't cause inflation to go up, and that, they believe, is 4.5%.
Obviously, in the government's employment white paper recently, the Treasurer, Jim Chalmers, was talking about full employment being someone who wants a job, is able to get one within a reasonable time. Now, he's at pains to say there isn't a discrepancy. Is there a discrepancy between that targeting of an employment figure at 4.5% and what the Treasurer is saying?
Of course there is. I mean, that's just woolly politics, really. I mean, there are currently 540,000 people or so, roughly 540,000 people unemployed. In order to get to 4.5%, there needs to be another 120,000 people out of a job. Now, the Reserve Bank doesn't say that, but that's the point. I mean, if that statement, the definition that Jim Chalmers has got, which is in the white paper, means anything at all, it means that unemployment should be lower than 3.7%, it seems to me. But he's trying to avoid any idea of conflict. But it surely means conflict. They are obviously at odds.
Just coming back to the today's figures, can you just briefly tell me, to finish, Alan, how big a deal the rising oil prices are and what impact they could have on inflation over the months ahead?
Well, obviously it's a big deal. We don't know what's going to happen. Saudi Arabia and Russia are throttling down supplies, and predictions generally are that the oil price will go to $100. So I think, the fuel price, the petrol price, will stay above $2. Don't forget that inflation is the movement in prices. If the petrol price goes above $2 and just stays there, then that won't push inflation up. And the other thing to remember is that the Reserve Bank tends not to pay too much attention to petrol prices. It looks for less volatile items and excludes volatile ones like that. So it doesn't necessarily mean an increase in interest rates. However, it is true that long-term interest rates in the United States are rising and just hit the highest level since 2007 because of an expectation that the Federal Reserve will put up interest rates again, partly because of rising energy prices. So look, it's as Michele Bullock said in today's statement, there is a lot of uncertainty. They don't really know what's going on. They're flying blind. The Federal Reserve head, Jerome Powell, said they're navigating by the stars under cloudy skies, and that's kind of true.
We will leave that, a note of uncertainty, stars and cloudy skies. Alan Kohler, a pleasure always. Thank you.
My pleasure.